to the first Hot Women in Treasury event powered by EY. It's truly inspiring to see all these professionals gathered here today from across the financial sector, across different industries, and across generations, coming together to recognize and celebrate the contributions of women in Treasury. Treasury is a field where strategy, regulation, and financial foresight intersect. Whether it's managing liquidity, navigating global banking relationships, or dealing with the ever-evolving challenges of transfer pricing and compliance, today's Treasury professionals operate at the core of business decision-making. So today is all about recognition, but also about momentum. We're here to celebrate achievements, but also to build pathways for mentorship, collaboration, and stronger representation at all levels. Our hope is that this becomes not just a one-off event, but the beginning of a vibrant, ongoing dialogue that reflects the diversity and dynamism of the Treasury profession. So we thank you for being here with us physically and online on this occasion, and we thank EY's Felicia Markopoulou and Elena Chronopoulou for helping us make it happen. We have special thanks for our president, Alexandros Koliavras, the head of Corporate Finance Working Group, Konstantinos Adritzopoulos, and the ex-head of our Communications Committee and one of our most active members, Georgios Alexis. Of course, last but not least, we would like to thank our esteemed speakers and moderators, Sophie Jackson, CEO of Treasury Today Group, Sophie Passagianidou, Group Treasury Operations Director at Intralot, Andiola Mehala, Treasury Director at Sani ICOS, and Eva Galou, co-head of the Events Committee at HAT. Krista?
Thank you. Thank you. Thank you very much, Liana, and a very warm welcome by myself and Elena also. The whole EY, we're very happy to have you here. We strongly support HAT in a number of initiatives the last years, and we are dedicated to continue like that in the number of events that are fostering diversity, inclusiveness, and areas that EY per se is doing a lot of work and we have embedded in our culture. So this is something very natural for us to have you here. Very happy to see you all. And let's kick off. Thank you very much. Just for the beginning, also for the people that are here, but those who are online, we would like to have we call it an icebreaker question, just to understand and see how would you be like with us today. So we will have you will see QR code shortly in your screens. Please scan with your mobiles. You can see the QR, I think it's all there. And the code, you can scan with your mobiles if you're on the screen or in the room. So the question is, what did you leave behind today to be with us? It's an open question and it's a free question. Your family, your work, whatever could work and whatever applies to anyone. I guess we are laughing. Someone has said that we has left behind a long meeting regarding an ERP implementation.
We saved you.
I think we'd like to
saved you.
Another saving.
Another saving from a boring banking. So it puts a benchmark for us. We need something to really be really attractive for you. So it's very happy. We're all very happy to have you here. And we know that it is normally work time, but it's also a time that it's an opportunity for everyone to have this ERP discussions. I think there is a thing lately.
We should have another meeting for that.
If I continue CRP discussions here, then we will have a dedicated ERP discussion meeting. Okay. So thanks, everyone. That was quick, but also nice to see that you have dedicated time to this event, and we're really happy for that, and hope it will make up for the time that you make with us. Thank you. Shall I also invite Eva and Elena, who will be introducing our first panel on transfer pricing? Thank you.
Good afternoon, everyone, and welcome to the first Women in Treasury panel, Treasury meets transfer pricing. We are glad to have you here for a discussion on how Treasury and transfer pricing teams can collaborate more effectively with multinational organizations. I am pleased to introduce our panelist, Elena Fonopoulou from EY.
Hi, everyone.
A transfer pricing expert with deep experience in intercompany financial transactions. Today, we will explore key challenges, best practices, and real-world implications of aligning financial strategies with tax compliance. We will also involve you in our conversation through live polls, so be ready to share your thoughts. Let's get started with a quick poll to set the stage. Now, the first question, you can line up. Yeah, you can scan the QR code. And our first question, are you involved in the process of pricing Treasury-related intercompany transactions? So, would you like to submit your answers?
I'm quite curious to see what the replies will be.
Yeah, I'm too.
Will we keep the suspense or I'm gonna present them?
No, I mean, please do, please do.
Thank you. See the response.
It's almost half-half, right?
Yeah.
That's a good thing.
We have some people also voting.
Okay, let's wait for a couple of minutes then. It's an absolute half-half. Okay, what happened?
There's the online participants that.
Okay, that are affecting now the voting. Okay. Still, I think it's a very good percentage that we have people participating in the price setting, more than just implementing policies, which is a very good thing, and that's what we are going to discuss about today. Promising results then.
Okay. So now that we have an idea of your familiarity with this topic, let's explore the importance of collaboration. Elena, why is it essential for Treasury and transfer pricing to work together in multinational corporations?
Well, from my experience, I would say because it's a win-win situation, we all work together to maximize efficiency. So from a corporate treasury perspective, key priorities at this point are to make sure that they have the most cost-efficient sourcing of funds and to make sure that they deploy this capital to the group. So in order to maximize the efficiency, you need to minimize or at least take into account in the equation other tax and compliance burdens. So for example, when we have, we're going to issue an intercompany loan, apart from the interest rate, we always take into account withholding tax implications, right? So transfer pricing comes into play in the same sense that transfer pricing is a tax compliance requirement, that non-compliance creates a lot of adjustments and can have a significant impact in the overall efficiency of the transaction.
So at this point, many in the finance department might ask, since this is a tax issue, why shouldn't the tax team handle it entirely? Why not just give Treasury guidelines to follow, similar to the withholding tax rates?
Well, it's not exactly the same because with transfer pricing, it's not an exact science and you cannot have a prescribed answer. You cannot have a table of interest rates that can be relevant to all intercompany loans, regardless of maturity, regardless of other key characteristics. So facts and circumstances of the specific case are very relevant to determining the prices. So what we are actually trying to do with transfer pricing is to explain that the pricing terms that we used for pricing the intercompany transactions are in the same are the same terms as the ones that market would use, right? So there are some rules and guidance that we have to follow, and those rules and guidance also have constraints alongside. But the critical assumptions used for this analysis is very much business driven. So this is where Treasury actually comes and collaboration becomes beneficial, because transfer pricing is actually meant to explain the business. So who would be more competent and more technically equipped to provide input on the critical assumptions, to give insights about the market, that the people actually doing the business. Okay? So from experience, we have the best results when collaboration comes in all stages, from the initial stage of understanding the needs and how we can accommodate the business needs, the needs of Treasury, but still remain compliant, to the actual implementation of the policies or methodologies that we have selected to use.
So it's clear that Treasury and transfer pricing must work hand in hand. But aligning these practices, it's not always straightforward. What are the biggest challenges companies face when ensuring that Treasury-driven financial transactions comply with transfer pricing guidelines?
Pain points. Well, as I said earlier, transfer pricing is meant to explain the business and not disrupt the business. But to be transfer pricing compliant, you need to be in position to evidence that you are at arm's length, not just be at arm's length. So you may have a feeling of how the market works, and it may be a valid feeling, but the feeling is not enough. You need to have actual disclosable data that you can evidence and support the feeling that you have. And this can be quite challenging in some situations where market data is scarce. For example, when you have a company receiving a loan and it has a very low credit rating, so market data can be scarce at that point. To make this a little bit more challenging, to add a layer of challenge, the analysis that you're going to perform is going to be reviewed by a tax auditor and not a treasurer, which means a person that most likely will not be that technically equipped or sophisticated in this regard. So needs to be as clear and as straightforward as possible to avoid challenges. And imagine that in complex transactions, such as convertible loans, for example, that require so much of technical expertise in order to analyze, and market data is very scarce. Imagine describing this to a tax auditor, right? And a huge pain point for transfer pricing professionals, I think more, but it's also where Treasury people can also support, is aligning requirements in different countries, because we all follow the OECD guidelines to some extent, and it is a good guidance, but we have a lot of cases where countries decide to interpret those guidelines differently. For example, now we have the case of Germany that recently introduced an implementation guidance in local legislation, saying in short that when a group subsidiary in Germany de facto has the credit rating of the group, unless the group can document and evidence with a specific methodology that this is not the case. So this is a little bit contrary to what we all have in mind about assessment of credit rating. How to create and draft policies that would be compliant in all different countries, and how to manage or mitigate the risk of non-compliance. So this is one of the reasons why Treasury and tax need to work together.
Now that we have covered the challenges in aligning Treasury transactions with transfer price, let's take a quick poll. So, in your experience, what are the most common Treasury related intercompany transactions? Please submit your answers.
The same link as you used before, so
It's the same.
you won't have
Like
to
it.
done it again.
I think we can see the responses.
Okay. You already.
Or create this, suspense, how they change.
Pretty one-sided so far.
I think I'm not
Okay,
surprised.
yeah, me neither, to be honest. I would expect cash pooling to have a little, okay, more than 0%.
Yes, the response.
Someone changed it.
Somebody to be back.
Okay, I think
Yeah, it's
the
good.
Okay.
picture will not change.
I mean, yeah, everybody voted for loans.
Okay, yeah. Thanks for sharing your responses. Since financing transactions are among the most common intercompany dealings, let's take a closer look at loan pricing and explore how Treasury can achieve compliance. What are the key takeaways for intercompany loans?
Well, there's much to discuss about intercompany loans and transfer pricing compliance. But for now, let's focus on some highlights and interesting developments that I think are relevant to our Treasury audience, right? So before we dive into the details of transfer pricing for loans, I would like to take a couple of minutes to discuss about a more general transfer pricing development that I think it's very much relevant to Treasury-related activities. And this has to do with risk analysis. Risk analysis has always been part of the transfer pricing analysis, delineation of the transaction, who does what risks everybody assumes. But there's been a change over the years from assessing risk in the contractual context to assessing risk in the context of financial capacity, meaning who has the technical resources to monitor and to manage the risk, and as well as the resources to undertake the financial cost in case this risk materializes. So while the primary question about transfer pricing remains whether for intercompany loan 2% interest rate is at arm's length or whether it should be 1% or 3%, we now have to answer additional questions. Is this a loan in the first place? In the sense that does the borrower has the financial capacity and the resources and the creditworthiness to actually meet the obligations of that loan in the first place? Because if not, should this be treated as a capital injection? And from the side of the borrower, of the lender, does it have the technical, the people and the resources to actually manage and monitor the risk? And if not, is there any other entity within the group that actually implicitly provides those technical or financial resources for managing the risk and should be considered for compensation? So there are questions that are not new, but they're gaining ground. And they're very much relevant to Treasury transactions because Treasury transaction, in essence, is about pricing risk, right? Yeah. So keeping that in mind, this short break, let's go back to the initial question of the 2% interest rate on the intercompany loan. There are many different ways and methodologies that you can price or document the interest rate of a loan, and it depends on the actual facts and circumstances of the case and the availability of data. The most common one is what we call, in transfer pricing terminology, the CAP method, which is in essence finding other transactions that have similar characteristics and benchmarking the rate of those transactions compared to the rate of the intercompany loan. It can be either internal comparables, other transactions within the group that with third parties, or it can be external comparables, as for example, rates, market rates for bonds and yields. I think the key question and challenge with regards to this is how to determine comparability. So what are the characteristics of the third-party transactions that I should look for? And acknowledging that there's no, it's quite unlikely to find the exact match to your tested transaction. It requires an approach of identifying what are the key factors that affect your pricing and search for comparables that have similarities in these factors. And selecting the most significant factors is quite a subjective approach. And as with everything that's subjective, it's very much challenged and scrutinized by the tax authority. So most of the transfer pricing audits have to do with selecting comparability criteria. And this is actually where Treasury expertise could be vital because it can help in supporting which comparability criteria were used. And it can also support in quantifying some of the comparability inefficiencies that may be in the benchmark. Another method that's commonly used is what we call the cost of fund approach. And this is practically testing the interest rate based on, by reference to the cost of fund of the lender and adjusting the interest rate for comparability issues, meaning, for example, an additional spread because the subsidiary receiving the loan has a lower credit rating. It usually works in cases of on-lending activities, so we see that a lot. When this method is used, what is critical is to assess the borrower's perspective in the sense that would the borrower be better off receiving intercompany financing instead of going to the market, for example? So there may be other benefits included in the transaction that support this decision, but can these benefits be explained to the tax audit? And can Treasury team support in explaining the different aspects and benefits to a tax auditor?
Obviously, there are many factors to consider. In each case, needs to be assessed individually. But speaking of loan pricing, let's see what the audience thinks. Let's have a quick poll. In your experience, what is the most common method for documenting the interest rate of a financing deal? Please submit your responses. I think we can see the answers.
I would guess it would be the first one.
Let's see.
Let's see if you're right.
Okay, I'm just making a lucky guess.
Yes.
You see? Of course.
This is what you propose, actually, but usually, so.
Depends.
You do not promote the benchmarking.
It did work for your case, Maureen. Okay.
Okay. So beyond loans, financial guarantees are a key aspect of intercompany financing, along with cash pooling structures. So let's explore their transfer pricing implications and how Treasury can ensure compliance.
Yes, of course. So it's great that you mentioned guarantees because there's been a huge, let's say, it's been a hot topic in the transfer pricing community, especially in the last few years since the release of the OECD guidelines for financial transactions. I think the key question here is when credit support provided from one company of the group to another member of the group can actually be considered a service and therefore requiring a guarantee fee. Not all credit support is expected to be charged, to have a fee charge. So there are two things that someone needs to take into consideration. The first one is whether this credit support creates a benefit for the borrowing entity. It can be better terms, or it can be better capacity to lend more funds. And the second one is whether this support comes from a deliberate action of the guarantor. So from one side of the spectrum, we have the credit support that is implicit and comes from the fact that the company belongs in a group. So we have the acknowledging, for example, of the credit rating of a subsidiary because of group support. And on the other side of the spectrum, we have those legally binding commitments from the guarantor that in case of default of the borrower, they will assume all the obligations of the borrower. It's the second one that requires a guarantee. It's not the first one. Okay. So once we have determined whether a guarantee fee is needed or not, I believe OECD guidelines provide detailed guidance on how to price those explicit guarantees. We will not get into much detail about that now, but I think there are a couple of points that are worth noting, taking also into consideration experience from previous audits. So the first point is that regardless of what methodology is used for assessing the guarantee fee, methodology should take firstly into account the implicit support provided and the enhancement of the credit rating of the borrower because of this implicit support, and then determine what the benefit is from the guarantee. The second one would be that, and it's been quite debated during tax audits, but now with OECD guidelines, it's clear, is that there may be a benefit for a guarantee even when the borrower has the same or even better credit rating than the guarantor. And the third one is that the guarantee fee should not completely offset the benefit that the borrower is getting, because there wouldn't be an incentive for a guarantee in the first place.
That's a great point about financial guarantees. Now let's shift our focus to another important area, cash pooling structures. So how should Treasury teams approach cash pooling while ensuring compliance?
There are much to say about cash poolings, and the most complex thing about cash poolings is that they do not happen outside of the context of a group. So we don't have market data to support it. We will focus on just a couple of points that I think are worth sharing with the audience here. One is the need to evaluate the actual circumstances and relationships between the parties and make sure that the pricing reflects actual risks undertaken by the parties. And this has to do with many different aspects of the transaction, but just to put it in an example. Cash poolings are typically short-term liquidity management tools. And as such, you expect that you will have short-term and two-sided debit and credit positions of the same participant. And because of that, they're usually priced based on short-term and borrowing and lending interest rates. What happens if one participant keeps a long-term position, credit or debit position, for, let's say, 2 years? Depending on the actual facts and circumstances, whether this is a one-time incident or whether this is a pattern, we may need to reconsider whether the short-term interest rates initially decided upon are still relevant for this participant and whether long-term interest rates should apply. It could make a huge difference on income or expense. And this has been one of the hot challenges of the tax authorities on cash poolings. So best practice to monitor regularly the timing of the positions and adjust interest rates when needed. The second point worth mentioning is that in market conditions, a participant would not be expected to participate in a cash pooling unless it was better off than its next best option. So acknowledging that participating in a cash pooling, apart from interest rate benefits, there can be other benefits that should be taken into consideration. Good practice is to keep an eye on market rates and make sure that any deviations or in cases where interest rates for the cash pooling are higher than market rates, these can be actually defended and supported in case of an audit.
Okay, I think now it's the time to turn to the regulatory challenges and ways to mitigate risks. So what are the risks of misalignment between Treasury's financing policies and transfer pricing?
But first and foremost is transfer pricing adjustments and penalties. They can have a significant impact on the bottom line of a company, but they could also potentially create a double taxation issue for the group, affecting the overall tax efficiency. But apart from the tax, let's say, implications, it may also have implications in financial planning for the company, in cash management optimization. For example, the goal of Treasury is to make sure that they have the most cost-efficient funding. A misjudgment in the company interest rates could lead to the decision of going for an external funding, even higher interest rates, instead of actually making use of internal sources and funds. So it can also misjudge the decisions.
I think we will have our last poll to see how all this apply in a corporate regular life.
Yes.
So, have you been involved in a transfer pricing audit for Treasury-related transactions?
Let's see. Make a guess. What do you think is going to be the answer?
I believe no, will be.
No, there wasn't an audit, or no, there was an audit, but Treasury was not involved.
From my experience, the tax team is involved in audits. Of course, there are cases where the Treasury team is part of this audit, but usually in a company, when you talk about audit, usually it's the tax team that handles it.
Yeah. I mean, it's understandable the tax team to lead,
Yes, of course.
But on the other side, I think especially for this kind of transactions, Treasury involvement it's very, very important.
So let's see.
Let's see.
Let's see. And you were right.
It's been a lot of years doing this.
Yeah, okay.
So now that we have seen our audience's
Yes.
responses, would you like to tell us where we currently stand in terms of controversy and audits worldwide?
Well, financial transactions are on increased controversy over the years on a global level. Not only increasing countries getting to controversy for financial transactions, but there are other increase in the technical aspects that they're actually challenging. And a similar trend we also have here in Greece. There's been an increase in scrutiny, mainly for loans and guarantees, less frequently for cash poolings so far. So one explanation can be that the tax authorities are becoming more sophisticated, more technical equipped, so they feel more confident to handle this kind of audits. Another explanation could be that the OECD guidelines, although that was the initial plan, failed to actually provide a desired level of consistency among countries. So we have what we discussed earlier about Germany, for example, and that creates a lot of controversy cross-border. But even when, even if those different interpretations were not there, it will take time for everybody to be aligned with the OECD guidelines. So bottom line, we are now going through a phase of increasingly increased controversy on financial transactions.
So with this in mind, what practical steps can Treasury take to strengthen compliance in intercompany financial transactions?
Well, first of all, I hope that so far I made it clear that the two teams need to work together in order to make sure that from one side you meet the objectives, business needs, but still remain compliant for transfer pricing purposes. I think the most significant tool that companies have as a management of risk is drafting policies instead of having ad hoc pricing or documentation of the transactions. Because apart from the consistency that's very much needed in case of tax audits through time or in different countries, it also gives you the opportunity to standardize processes and data, and therefore it makes monitoring or implementation much more efficient and much more easy. And in my view, this is the first stage where Treasury should be involved, and it's the most significant one. Participate in the design of those policies. Make sure that the technical knowledge and expertise of the Treasury team is reflected in there, that the policies are relevant, they could be sustainable, challenge the assumptions made by tax, and make sure that those policies are reviewed and revisited on a frequent basis, because business needs may change depending on internal factors or external factors. So make sure that the policies actually reflect the business needs and they remain relevant to what the Treasury needs. But on the other side, policies are not worth it if you don't implement those policies consistently and, let's say, appropriately. So Treasury is also in the front line of the implementation. Prepare policies, consistently apply those policies, otherwise discuss with tax in case of deviations beforehand. And the most significant one, which is, I think, most times it's not that usual, is keep supporting documentation when you price a transaction. It's very, very important in case of tax audits to be able to present a print screen for the swap that you did, or a report based on which you relied to set up the interest rate at the time that the interest rate was set. So I think those are just a few points where Treasury can actually support the whole process.
Thank you, Elena. And I think now is the time to open it to the audience. So if you have any question or would like to dive deeper into any of the topics we have discussed, now is the time. You can also use Slido to ask your question.
You have some people typing.
So if anyone from the audience here would like to ask, you can hear the question live. Oh, okay. Can I document a financing transaction using banknotes, Lina?
Quotes from banks. I would assume.
I do.
Well, that if this is the question, then it's a very good question, because this is something that changed a lot, and practice changed a lot after the release of the OECD guidelines. In the past, it was a usual practice. We go to the bank, get a bank fee quote for a loan, and we use that as a reference for the intercompany interest rate, saying that the bank would give us the same interest rate. And it was a usual practice.
I confirm.
Yes, until OECD said, okay, this is not enough unless it is binding as a fee quote. Just having a paper saying that if you come for a loan, I will give you this interest rate is not enough. It's not what we said before, actual disclosable evidence that this is the interest rate. So it gave a lot of hard time for people and Treasury to document those interest rates. But I think we need to keep it in mind.
Okay, thank you. Do we have any other question?
Having no questions, it's either we did very well or nobody understood anything.
It's 5 o'clock in Greece, so
Okay.
it's a hard time, and it's a topic. It's
Quite
kind
technical,
of
yeah.
heavy.
Thank you.
So we have covered a lot today, from the essentials of Treasury and transfer pricing, collaboration to compliance challenges and risk mitigation. A key takeaway is that alignment between Treasury and transfer pricing isn't just about compliance. It's about financial efficiency, risk management, and corporate governance.
True.
So I'd like to thank our expert Elena for her valuable insights, and of course all of you for your participation. Thank you. Thank you. And we will have a short break for 10 minutes.
Yeah. Grab a coffee for the next one.
Okay, thanks everyone for joining back. And we're ready to move to the second part of our today's meeting. We had a very nice discussion from Elena about the transfer pricing. I think that it was very insightful, even for anyone that was not involved in such discussions in the past. The company, it is something that we should have in mind the future and how we can do better our work on the regulatory aspect that each company has to face. On the second part, and where we would like to meet the attendees also with me, and Sophie has also joined us online. She should be somewhere with us. So we will be discussing how women are actually leading through change in this evolving landscape of Treasury over the years, and how we can support to tackle today's challenges. So this is how we will move on.
So should we see again the results or should Sophie present?
Let's start, Sophie. Let's confirm that Sophie is with us.
Hi, I'm with you. I'm with you. I was just
Okay,
waiting to
good.
make sure I'm not
Thank
interrupting. Hi,
you.
everybody.
Hi, Sophie.
Hi.
Perfect. So let me just get up my my presentation. Right, can everyone see everything okay?
We can see you in the room. I think also online participants are okay, and we can see the presentation. So we're good to go.
Fantastic. So hi, everyone. First of all, I'm so excited that you're all together to celebrate something that I'm very passionate about, which is women in Treasury and indeed women in all functions of corporate finance. So I'm sure that all of you don't know me or my company Treasury Today Group. So I wanted to just give a quick introduction. So Treasury Today Group is 27 years old now. It was founded by my mother in the 90s, Angela Berry. And it is now, as well as being a big corporate finance publishing platform, I would say what we are at our heart is a community hub. So for those of you who don't know us very well, I encourage you all to get involved. You can sign up to our Treasury Insights newsletter, look at lots of the activities that we're doing. We also have a dedicated LinkedIn Women in Treasury group, and we host forums all across the world. And we also run something which some of you will know, I'm sure, which is our Adam Smith Awards, which you're all very welcome to get involved with. This is dedicated to best practice in corporate treasury and finance. So I'm here today to talk to you about women in Treasury, which, as I mentioned, is something that I'm incredibly passionate about. So because we were female-founded company, I think it was quite natural that we began to have a lot of personal conversations with female corporates as they were practicing. In the days when the company was established, as you can imagine, if you looked at things like Eurofinance or other big corporate events that were going on focused on Treasury, there was a dearth of women on stage, that's for sure. There wasn't very much representation of women in those senior roles. And so the women that were there, because we were very female heavy, we began to have quite deep relationships with them. And they would often speak to us around their challenges, the lack of visibility, their quest to find mentors and other leaders to help them on their growth missions with their own personal development. So that was the beginning of Women in Treasury. We realized there's something special that we can do here, which is to connect them with each other, to show them other examples of amazing leadership that was going on across the world. So we began with, first of all, our Women in Treasury study, which has been rebranded for the last 2 years as the Global Equity Study, because we now look at far more than just gender within the study. But what the studies allowed us to do over the last 12 years is to build up a very powerful picture of the challenges that women face in accessing the positions that they'd like, in being visible, in gaining access to the top roles, to the top salaries, and to top representation. But it also allows us to look at their achievements. So for those that have made it, we are able to draw out patterns that we can see and then use it to go from data to action. So that's really what's at the heart of the study, is taking our findings and then using that to go ahead and then help to offer resources. So as I mentioned, we host our forums. We have our Women in Treasury Forum in London, in New York, and in Singapore. They've been going for nearly a decade now. And this is a great opportunity to bring everybody together, to hear from amazing professionals on their personal journey, and to ask for advice and gain wisdom. It's also a source of mentoring and support. I think for a lot of you in corporations where there's not a fixed structure offering mentorship, it can be quite hard to know where are you supposed to go and how are you supposed to get those resources that you need to get ahead. So before we talk a little bit about that, I wanted to take us through some of the data set that we've got from our most recent study, which is 2024. And I'm also going to preface this with asking you all to get involved, because I would love to learn more about the experience of women in Greece in particular. So our study will open this summer. And I would love to invite you all to please take part and share your personal journeys and your personal experiences. So let's take a look at who took part in last year's study. So as you can see, the majority of our representation comes from EMEA, so that's 65%. We then have 15% from the Americas and 19% from Asia Pacific. So our data set allows us to take a look really across the world and see, are there nuances and experiences? I started my career in Asia, and I know that the experience for women there is very different than it may be in the Americas, but there are also some commonalities in challenges that people face. So I'm really excited to use today as a stepping off point to learn more about the specificities and the nuances of the experience of women in Greece, as well as their allies and supporters of all genders. If you look at the industry sector representation, you can see we've really got a great cross section of industries represented there. And when it comes to age, no surprises there, because we're looking at experienced corporates, with our majority respondents are 35 to 44, and then our second biggest representation is 45 to 54. But we also have a good representation, I would say, from those who are over 55 in the sector. And this year we've looked at the particular specificities, or the intersection, if you like, of age with gender. I think a lot of women talk about this kind of double bind you face at the end of your 40s of facing discrimination based on gender and age coming together at once. So you'll see, if you guys read the whole study, which I welcome you to do, and you can reach out to request a PDF copy to myself if you haven't been able to read it all. We look at the experience of the menopause and all sorts of other issues that are specific to the female experience in the workplace. If you look at the gender, you'll also see that we do have 22% male respondents. So I am thrilled that you are a mixed gender gathering to speak about such an important issue, because often women are sat alone in a room talking about issues that they're facing. We all know that these issues are there. We are not alone in having to solve them. And the majority of leadership of our respondents, that CFO and CEO level, remains male. So without their support, their understanding, and their ability to be part of this dialogue, sadly, I just really don't think we will get to any progress. So I am delighted that you're kicking off with a diverse set of people coming together to speak about the importance of gender. So, as I mentioned earlier, one of the main issues that we focus on within the study is tools to get you ahead. Rather than just speaking around the barriers that are still being faced, we want to think about what are some of the dynamos that you can get to activate yourself to that next level. So it's going to come to no one's surprise that 75% of our respondents believe that mentoring, sponsorship, and coaching are critical for a successful career. And I think this is a room that women were often kept out of in the past. People talk a lot about positive discrimination now. They don't talk about the fact that positive discrimination has been going on for the whole time we've had professional careers, which is, the golf course, the clubhouse, cigar rooms and drinks and all sorts of bonding experiences that men had together, which women were excluded from, which allowed them to gain these very things we're talking about: mentors, sponsors, and help to activate their careers. So I want us to think a little bit about these three things because they are distinct. So mentoring, I'm sure we all know what that is. That can either be facilitated by your own organization, but it can also be something that you seek out yourself. And I've often said that most people who've been my mentor don't know that they've been my mentor. That I've run a business from a young age, and I was in a very small sector of an industry where most people who could advise me were my competitors. So I had to go and find inspiration from talks, from amazing people that I saw on LinkedIn. And I would say start stalking them, for want of a better word, build a rapport, show them that I could see something in them that I would find valuable, and then start relationships that have given me so much I can't tell you. And last year, we appointed many of these people to our Senior Advisory Council. So my advice to you all would be to have your own Senior Advisory Council. Think of yourselves as small businesses. Have that entrepreneurial spirit. Who are the people that you need to get advice from who can help you? And they're not all going to come from your organization, that's for sure. I would also encourage you to think of yourself as a resource. We learn from being guided by our elders, but we also learn by becoming an elder ourselves. So even when I speak to junior treasurers who are in their early 20s, I recommend that they start talking to school-age children who are thinking about a career in finance. Inspire them, listen to their questions, learn from the generation behind you or from a new cohort that's entering into the workforce. They don't always need to be younger to be those that are starting out in the career. And I think that gives you as much as learning from your elders does. The next is sponsors. So the way that I differentiate it is a sponsor is someone who advocates for you, so who helps you get noticed when you're not in the room. They are much more official and they're much more intentional. So when you're being considered for a promotion, they may well be in that room and they're going to advocate for your skills. So you need both really in big corporations in order to get yourself noticed and to have important people paying attention when your name pops up. So be thinking when you're in your elevator or when you're in an opportunity, what's your 10-second pitch you can make to those people that you want to be on your team about who you are, the work that you've done, and the value that you've brought to your organization. And there was a fabulous woman, Diane Reyes, who was at HSBC, who said you need to have an elevator pitch always, because you never know when you're going to have that 1-minute opportunity to get somebody to come and be your advocate. So that's my advice. And then finally, on this point is coaching. So this is something that can either be provided by your organization or you can go for yourself. So I work with a professional coach for the last 2 years now that I found myself. And she's based in America. We do it remotely. And she has brought me more new skills than anyone I've ever worked with, to be honest. And just having that objective person that you can tell the challenges you're facing and have them give you tools to at different phases of your career to combat that is invaluable. I know not everybody has the resources to go for a coach, so you can also be each other's coaches. If one of you is really good at presenting, go ahead, spend 20 minutes together and practice your coaching, your presenting skills, and you'll be amazed what that can make you achieve. Okay, I'm going to move us along now. Next up is the issue of pay parity. So this is whether you feel you're paid the same as men in your organization. It's quite a controversial issue because until we have full transparency, we never know for sure. So what my study looks at is the perception of whether men and women are paid equally. And as you can see, it's been pretty static for the last 10 years. It hovers around the 40% mark. So last year was 43% of women do not feel they're paid the same as men at the same level of seniority in their organizations. So I think what this shows, if you're a male leader, is that there is an issue where women don't feel as valued. They don't feel that they have the same opportunities and they don't feel that they're recompensed as much. And that's something for an organization to change rather than us. But I think it's important to realize. And as you can see in this pull-out quote, which I wanted us to look at, one of our respondents says they're not sure. Of course, unless their male colleagues show them their salary, which some kind people do. I would lean towards no. That means no, she's not paid the same as her male colleagues, because research and observations suggest that discrepancies can exist, particularly due to differences in negotiation styles. It's well documented that women are often less likely to negotiate their salaries as aggressively as men, which can contribute to pay gaps. So I think that's very interesting. I hear statistics floating around a lot, and I don't know if they're true, but one says that men are 3 times more likely to request a salary review. So until we reach true equality, I would just recommend that all the women, as much as possible, advocate for yourselves where possible. When you're coming into a salary negotiation, know what you've brought in the last year. Stop taking on tasks that aren't recompensed, that don't bring you any advancement, but that you end up doing because you are so capable and you're kind and people know that you will. If they're not going to help you move ahead and get more recompense, then you need to think about whether this is the right time in your career to be doing them. So that's my advice. And then representation, I mentioned some statistics earlier. So representation is when we look to the top level, how many women are we seeing in our respondents' organizations? Only 12% work for a company with a female CEO. So that's quite static. The CFO level is around 17%, and that has gone up since we started the study, but it's still very low, as we know. We also, when we look at board level representation, there is still low levels of diversity in every facet on boards. They say there are more people called John on the top 100 companies on boards than women in America. So that gives us an idea of the kind of challenges we're facing. Well, one of the questions we ask is whether people think there should be a quota for representation as on the basis of that. And as you can see, we have 40% who support a quota for board representation, 35% who don't. That's for ethnic diversity. And then when it comes to female representation, 53% support a quota. This has gone up over time. So when we started this study, I think a lot of people still hope we could do this based on merit only. And then over the last decade, as that board level representation didn't increase, people have more moved towards quotas, not because they want them, but I think they see them as a necessary evil for one generation to get us more representation so that then we can move forward with more equality. Okay, and then the final area that I wanted to talk to you about, as we are a diverse group and there are many men in the audience supporting this topic, is our male perspectives part of our study. So 22% of our respondents are male, and they complete our male perspectives study, and they talk about their role, because the role of allyship is critical. As I mentioned, no advancements in women's representation, including even the movement to equal right to vote, happens without men helping. So I think they have such a critical role to play, and I really welcome them to get as involved as they can, just to listen at first and then to see how they can activate for women, particularly when they're not in the room. I think there's a lot that happens when there's a mixed room, but when it's only men in a room, are you still advocating for women then? Because that's where we most need you. So I won't go into the details of this because I'm going to use up too much time. I know you've got a fabulous panel conversation coming up. But as I mentioned, you're all free to download the whole study. It covers a variety of different areas. And I hope that at least this has given you some food for thought and can help you to think about some of the areas that you might want to focus on yourselves moving forward from today. So thank you so much, everybody.
Thank you, Sophie. Thanks very much for your presentation. Do you have any questions for Sophie, either from the audience that is with us in the room or online people? I think it was very insightful, and it was very nice to see how these questions are being addressed in the global scale that you're working on the survey. Very delighted also to get the survey in Greece on the next round and to be part of your sample. So feel free to share with us, and through the HAT organization, we can also support this initiative.
Fantastic.
So if we don't have any questions, we can move to the next section of our discussion. But it is also a bridge on what Sophie has been discussing. So we have prepared some questions that are quite similar with what Sophie has shared, just to understand a little bit and get some insights on how this survey or some of these questions would look like in Greece. We would like your support on that. We have a small the sample of the people here and your participation online. But let's see how they could be answered from our audience. I think you will see the QR in a while. It's the same QR as before.
Exactly, yeah.
It is the same. So
So, Sophie, you can remove the share screen.
yes, Sophie, you need to stop sharing from your side. Maybe we've lost him. I think she's frozen.
Yeah.
Yeah.
Maybe
I don't have control, sorry.
Yeah, okay. Just give us a second. All right. So. Okay, that should be visible to the online participants as well.
Okay. I think yes. For the people in the room, you do have the QR. We want it again.
Want it again?
I can give it on the side screen.
Yes. It's also. Oh, you do it remotely. Yeah. So the question is here: what percentage of partners of star are women? It would be interesting to see the results.
So the results, we already have 10.
We do.
So
Let's see.
let's see.
Surprisingly, yeah.
That was about 11 to 30.
Because if you add actually the first question and less than 50 and 50, around 75, it will come around 50% of our
Wait for
respondents.
people to stop voting because it changes. You have, the second option is less than 10%.
Yes. So I think we are on the edge because indeed less than 10% have 23%, but above 31% we have more than 50.
Yeah.
So quite extreme bias either ways. Okay, let's see another one, and then I will ask Diola and Sophia how this applies to their organization. But let's see the next one also. What are your aspirations? That's a very nice question, I think. It's not by name, so feel free to ask whatever you want here.
Okay.
A lot of COs. Okay.
And I want to have a visionary audience, so let's say we have a group treasurer and depending dream big, CEO and CFO. Okay, so we have a committed audience, a committed treasury audience.
And CFO, it's not become a CFO, but become a CEO. Then
Yes, the CFO is not an alternative.
switch from treasury to CEO.
Do you have more answers?
12 already. No, we're not waiting somebody to vote. So
Okay, let's move to the next one. Do you believe that women in your organization are paid the same as the male counterparts? It's what Sophie also described earlier. So let's see how that could apply to Greece. And very strong, no.
Which is interesting because we also have male participants.
Indeed.
I'm curious
And,
if this 21% comes from the male participants or not.
We can look women to the answer and see how this changes. But it is, I think this is also really in contradiction with the survey because don't know. And in the survey had a very large portion,
Yeah.
above 40 or 35 or 40%. here we have a very affirmative no, which is changes, but still it's more than half. Interesting. And the last one, I think we have the last one. How do you perceive the current representation of women in senior treasury positions in Greece? So we have the very high, moderate, low, very low, or zero, or no representation at all. Interesting results. I mean, if you have moderate representation but not well paid, something there is a sign there. Okay, well, thank you all for the answers. Today we have with us Sophia and Andiola.
Hello.
I will give a minute to them to introduce themselves. They will also have prepared some questions and they will also discuss their experience on how the women are treated in the Treasury, in their organization, but also during their career path. They will explain, of course, and they will give us their insights. So thank you for being here with us. Sophia, just a couple of words for you.
Hello, I'm Sofia Pasagannidou. I'm the Group Treasury Director of Intralot, working there for 11 years now. I was not, when I went to Intralot, I was not in that position. But when our director left, I took his position and all his responsibilities. Nice to meet you guys.
Thank you. And Adiola.
Hi, everyone. I'm the Treasury Director of Sanikos Group, a hospitality business, for if someone has not heard of us. I'm responsible for the treasury operations of the whole group. We have resorts in Greece, in Spain, and shortly in Portugal and elsewhere. I joined Sanikos almost a year and a half ago, and with a mission to create the new treasury team for the group, which would be responsible for the whole group compared to the previous team, which was mainly responsible for our Greek operations. And before that, I was working at National Bank of Greece, working on the real estate financing. Thank you.
Okay, great. It's great to have you here. So, as a first question, and I would not like to focus on still at the moment, but I would like to get your view. We are operating in a very fast evolving environment. So I would like to get your view. What are the highest priorities that you face today as a Treasury Department of organizations with global presence? Because both of them have either expanded or limited presence, but it's still international presence. So what do you perceive as the highest priorities at the moment? Sophia?
Yeah. Okay, and because Intralot has a lot of subsidiaries and some of them are in very unsecure markets with great FX risks, for example, Argentina, Turkey. So FX is an issue, how to handle this. Even if it's not a natural problem and cash flow problem, it's a problem for our results. So we have to do something about this. And it's very difficult markets. I mean, even there are some times that we cannot even hedge these currencies or to bring cash back to the group from Argentina. It's very difficult to make. So you have a company there having funds and not being able to give dividends. Also to have a good view of the cash liquidity of all these companies and all these subsidiaries, because even if you are trying a lot of things like cash pooling, etc., there are issues in all these things with tax issues, etc., and you are not always available to use these things. So you need to manage a lot all these people who are from very different countries and cultures. to give you access to everything they do. So you have you. And I think this is very difficult. And also you have to optimize your cost to minimize the risk of human mistake. The treasury is a lot of problem with human mistake. I mean, you must automate all the procedure. You're about cash, and cash is a very sensitive issue in the companies.
Indeed, you don't want to make mistake with cash.
Everybody did it and died.
And then the other, also for some vehicles?
Yes, so for Sun Ecos, we don't have the FX risk that Sophia mentioned. Our revenues are all in euros and same for our costs. So this is not a headache that at least for now we have. Our risk that we had, it's only interest rate risk. So that is something that we hedge. But we are a seasonal business, so we operate for 6 months during the year and are very cash rich during that period. So one of our most important tasks is to manage that liquidity so you can use it throughout the year. And not only, so we have the existing resorts that generate a lot of cash, and our task is to effectively utilize it in order to make acquisitions. We do many acquisitions, extension of our resorts, very high growth in our strategy. So using that excess liquidity in the most effective way, investing the cash when you have a lot of it, especially during summer, and having access to additional debt financing in order to ensure that you can fund all the growth that the business needs to achieve. It's something that is very, very important and crucial for our business. I fully agree with Sophia that we cannot make mistakes. And what we are trying to improve internally is to implement systems. So for Treasury, we are implementing a Treasury management system. So very, very soon that will be completed. So one of our challenges as a Treasury team is, first of all, for us to use the capacity that this system is going to improve in our day-to-day life to the best way that we can, and also help the other team members of the finance team that are going to use it in order to help them as well. And at the same time, in order to improve all our operations as a group level, we are implementing a consolidation and planning tool. So in order to remove all the Excels and all the manual work and the human error, we are implementing also that system as well as at the group level. So one of our challenges as well as a team is to make sure that whatever we need, it's going to be provided by this system as well, and learn it and use it for our long-term planning as well.
And this is very interesting, and it's very interesting to hear about technology and how technology also is involved within the role of Treasury. Okay, let's keep that, because I think it's a very good point to discuss. If we were about to talk about the challenges that you're facing and that you have also faced in your career path during your evolution as professional, what would you mark as the challenges for women and as Treasury professionals today, as yourselves, to foster diversity and inclusion in your teams? So it's both how you have felt this way up to the position that you are today, but also what is your position on doing the same, fostering diversity within the teams that you are working at the moment?
It's me?
Yeah.
Okay. Well, we're not a good example in Intralot because we are mostly women in Treasury.
That's a very good example.
Yes. And it's surprising because we had a meeting with Alpha Bank and they came in and they saw 4 women in front of them. They were not expected at all.
I can imagine.
All men, and they saw 4 women. Because this is the truth. They're not used to it. I think that the challenges are you have to ensure that you have a weight for the leadership opportunities. You can be in a leadership position. You can do it. The company allows you to be, and I'm not sure if this has changed their minds. I mean, they do things. Okay, it's better than some years ago. They change things, but I'm not sure that if the minds have changed. Okay, I don't have any problems with men in my company, but okay, and the other women see me as an example of we can make it. Yes, we can do. We can make it, but this should not be the point. I mean, everyone should have the opportunity if he is very good at what he is doing to have the same salary, the same positions, the way they're facing him. I think it's very important and very challenging. And these years are things I believe that things may change.
It's a good perspective. It's an optimistic perspective. And Viola, is it the same for you? Do you have the same view from your experience?
Yeah, I'd say what still has to change is the mindset of people when they see a woman in front of them being in a senior position. In my opinion, that has improved, and I hope that it's going to improve even more as the number of women that we see in senior leadership position increases. But there is still a lot of work to do in our business. It's something that we support very much, and we are very multicultural organization in any case. But there is still room for improvement, and I believe that also we need to help on that as women by supporting each other and making sure that young women who start their career or are in the first years of a senior position, they have the support in order to believe that they can do it, that it wasn't easy for everyone, either a man or a woman to achieve. It's not like many times we think like, I have so many challenges, so many difficulties, I'm not going to make it for X, Y, Z. It was very easy. And when you, if you share the challenges that you had to overcome, that it's going to help other people as well. And this is what I think.
This is
that
the
we
issue
should
of
do as well.
community, actually. So
Yeah.
it is a good example. So
And so we must support each other
Exactly.
because this is an issue
Exactly.
too.
Exactly.
Usually women don't get together very,
It's
very
true,
well.
it's true.
When,
and I would expect, for example, in your case that you have 4 women, if someone says, there's a department that is not very well bonded, or, there's some myths about women working together, which is actually myths. The idea is that,
no, the truth is that we must understand the women that are in our team and their needs and how to help them. Because
exactly,
we have the same needs.
yes, and you have been through this path, so
Yeah.
it's very easy. So actually, if we were to say, what would be the most impactful way to support women advancing now that you are here and now that you have this experience? What do you think is really helpful for even, younger ages? If they see you and say, I want to become a treasurer and I want to be like Sophia and Andiola,
Mm-hmm.
what do you think would be the most impactful way of supporting those girls or women?
Mentorship, I think.
Yeah,
We have to talk to them. We have to guide them how to succeed in their career. Also, this is what he said, increasing the visibility of women in such roles. They must see that, okay, I can do this and I can be a senior in a few years, or if I work hard, I can succeed. Also because women are also mothers, I think some flexible work arrangements, this would be very helpful because if we want or not, usually the mother is the one that has to be home and do another jobs there, even more difficult. Or it's it's not happening so often that the man will tell, okay, I will be home for you and you can stay at work, even if the woman is in a more senior level. Usually it's you that you have to go back to make a lot of things and see your kids. And it's time that we actually meet, okay, because we have a lot of roles in this life. So I think we can help them and we should help them with all these tasks that they have to face.
You raised a very particular issue on motherhood, which is also an additional role that has to be combined and doesn't have to overlap.
Yeah, correct.
It's a very, the balance is very crucial there.
Because then you will not be a good mother. So
Yeah.
you don't know which role to actually, we must have both.
It's true, it's true. And I think mentorship for that is very crucial and leading the way forward there. Adiola?
Yeah, I fully agree with Sophia on the mentorship, and I was thinking exactly the same when I saw the results from the survey that Sophie presented earlier. It is very important for companies to support mentorship programs to help women and men. I mean everyone. It's not only about women, obviously, to have access to these programs and support. I mean, by financially paying also for them. I agree on the visibility of, if we could call them, role models for men and women that are successful in their career. We should increase the visibility of these professionals to the wider community for them to for people to perceive and to see them as someone that they want to become when they as they develop in their career. Something else that companies could do is organize either internally, if I mean it's a large company that can offer that to many young professionals, is also development programs which could be tailor-made for their needs, communication, negotiation skills, strategic thinking, all of those very important soft skills that you cannot learn in the same way as you can learn Microsoft Excel or another tool. Yeah, I think it's very important for companies to invest in that.
I think it's very important for companies to invest in people, and regardless of being man or women.
Yeah.
And the Treasury, you mentioned a very nice example before, because the Treasury organization and the Treasury department evolves. So the skill set has to change. And we all have mentioned before a lot about technology. So now that we are 2025 and you have at least 10 or 20 years of careers in Treasury, what do you think would be the most important skill to develop the years to come? Now that you know the landscape, the evolution, technology, AI in our everyday life, what do you think would be the most important skill for the Treasury leaders that they have to develop?
I think that you have to adapt in all these things, of course, to learn them. Okay, we're a generation that we have a feeling of PCs, etc., and technology. It's easier for us, so we have to adapt and use everything that can help us. But the most important skills that I think that someone should have, it's management skills, communication skills, because we have to get so many people, the CFOs, the banks, our team. We have to cooperate with so many teams, and always we are the last one part. I mean, everything that happens, the last person is the treasurer who has to pay, to receive, to.
But you have the money.
all the money.
Find a solution for a problem that no one thought that.
Yes. The capital controls we had, everything was okay with us. So, and we have to influence the senior executives, and I think for a woman, it's that a woman has to have very strong communication skills. And what I don't like to hear usually when they ask me how you're doing it, and their answer for everyone is, because you're like a male. You know, you're talking and you're having this male thing. And I cannot understand what does it mean. Why I'm like a male? So if I have communication skills or management skills, I can go and talk with the CFO, with the CEO, change the perspective. This means that I'm a male.
I don't know.
I cannot be a woman and do this.
Is it something in
things.
the
I cannot
DNA
have
that you
these
don't know?
skills. You know, it's something common that I hear.
It's
Yes.
true. It's true. I think across professions. It's because we have this bias of what a male is and what a female is. Yeah. But
Yes.
if you're a female, you're supposed to be like very soft and very
Yeah.
and not be
Exactly.
talking and
Yeah.
yeah. Not yeah. It's true. And the other?
So I fully agree with Sophia on the communication and negotiation skills. I would add also the strategic thinking. I mean, Treasury is the one responsible for the financial health of a company. So we should always think what is better, sorry, on a long term for our company. Be very, very careful on the decisions that we make, looking always on the big picture and what is better for the full organization. And if you think strategically, you can also take examples and see what is happening in the environment. For example, geopolitical risks. You cannot ignore and not think how that is going to affect your liquidity, your cash flow, and be proactive before these events happen. And also, what we should always keep in our mind is that we cannot achieve anything alone. So we cannot think only about our team or the finance team. It's always about the full organization, about the people that that work in order for the final result for the company to be successful. So it's not only to see what you need to do as a team in order to be successful, if what three other teams do, and it's always like that. It's never about one team in order to achieve the ultimate goal of a company. And we need to adapt and be also resilient with all the changes that happen, and always sure that we can overcome the challenges and be successful.
Yeah.
And also they must trust you. I mean, this is with a treasurer, I think all the company and especially the CEO, they must have a relation.
Very strong one.
Very strong trust.
Exactly.
It's true. It's true. So thank you very much for your answering.
Thank you.
Yeah. I'm not sure if we have any questions from the audience or something that also from the room that we would like to discuss.
We have some comments.
Yeah, please. Sorry.
Should I read them out loud or you can?
Let's see. So the first one, let's go.
Yes.
This one is from Mariana. From Greece already, yes. And I think today they will evolve, they will increase even better. So Mariana, something.
Further up?
Yes, further.
Okay, that's where it starts. Wait. Yeah, that's where it starts. From Sophie.
Already Mariana has shot something before.
Yeah.
Yeah, but it was for the previous.
Q&A.
Yeah, it was for the Q&A.
Okay. Thank you very much for the kind words. I think the community is something that we have discussed, Sophia and Viola have emphasized, and it will be the start of this community for Greece. I hope we do so and we all keep in touch.
Saying about supporting each other.
Yeah. It's true. I mean, there was a misconception, and I mean, that I'm not sure if it was a myth, but sometimes we do have to support women more.
I think there were some bad examples.
Yeah.
You don't know.
There were some bad examples that were, becoming trend.
Yeah.
And it's something we can spend, yes.
Yes.
Mm-hmm.
It's competition, and sometimes you see, if I have been through, as a woman, have been through the very difficult situation, then you also have to go through the same difficult situation, because otherwise you're not achieving the life.
Yeah, yeah.
So it is a
You will not be
competition,
so.
yeah.
Maybe it's also because when a woman had a senior, she had to be more strict in order to survive a few years ago. So maybe this was the problem to the team and why she maybe was so strict. But they had to survive. Now
That's true,
this is not the case.
To be realistic, that was the truth many years, not so many years ago. I think we have discussed also on my side, when I joined EY, the consulting, I was, the first day I joined the room, and I was the only woman, it was the manager's meeting, and I was the only woman in the meeting. And I see the partner saying, don't worry, there are more. Actually, there was one more. But this was going to change completely at the moment.
And a lot when
Yeah.
we make some meetings, it's something like 50 men and 2
Nothing is on this kind of ratio, which is 10 years ago. Now we have all changed, and we're evolving to something completely different. Okay. And Mariana and Sophie, thank you very much for your participation. And we didn't have the chance as we were talking to see your chat, but I'm happy that we have some more thoughts and you also agree with us and the thoughts that Adiola and Sophia have shared with us. So, thank you very much, everyone. Thank you, girls. Thank you for being here, and thanks for everyone who joined online, who joined on offices, for being here with us. As I said, I think and I hope that this is only the beginning of our community. HAT has very nice ideas, and thank you for being with us and sharing with us as well. Thank you very much. Thank you.